Where, apart from under the mattress, should you put your money? With the Bank of England this week indicating it's likely to keep interest rates low for years and volatility on the stock market, figures today suggest savers are increasingly trying to buy one of these. What's the impact on a debt-riddled economy when savers can't save? The extraordinary story of the woman who died in the 1950s and whose apparently immortal cancer cells made billions for the drug companies. We ask why it's taken more than half a century for her to be recognized. Plus, New Jersey, Chicago, Brooklyn and Uxbridge. When did our quietest suburbs become the hideout of choice for mafia dons? And who's the daddy? Why the extraordinary fascination with giant pandas? We're looking in on Edinburgh Zoo's Panda Cam. Hello, good evening. The forward guidance, as they say in the jargon, coming from the Bank of England this week is that UK interest rates are likely to stay very low for some time, possibly until 2016, unless inflation begins to take off. Well, that's great news for borrowers, especially those with large mortgages, but not good news for savers, the people whose thrift the government says we require for a healthy economy. So are there any good choices for savers right now? And are the thrifty among us being penalised for their virtue? Robin Denslow reports.
It's the end of the week. Friday evening at the historic Rochford 100 Golf Club in Essex, and a group of friends get together for a game and a little putting practice. 3 of them are retired. They've paid off their mortgages and have savings. But what to do with them in a week when the new governor of the Bank of England gave a clear signal that interest rates will remain at a mere 0.5% for some time? Jack, who used to run a fish restaurant, has money in the bank, but unless his premium bonds succeed, his savings are unlikely to match the rate of inflation.
Well, we don't get much money back, but we know where it is, and also we can get hold of it at any moment, which is a good thing if anything does go wrong. But at the present time, it doesn't really give you any encouragement to invest anywhere, really.
Rochford is the embodiment of the Thatcherite dream of a property-owning democracy. 83% of the homes here are owner-occupied, and that's the highest rate anywhere in England. The news from the Bank of England may be good for borrowers or those with mortgages, but it's not good for those who've worked all their lives and have built up their savings.
Well, we've got a lot of people in this country who have put money aside over the past years so that they would have a nest egg or something to live on in their later life. They were trying to be responsible, they were trying to be prudent, as they were always encouraged to be, and they had budgeted for having some income from their savings. They have now found that that income has virtually disappeared. And what we heard this week is that even over the next 3 years, it's unlikely that they'll get any income at all.
But if you've got enough money, it's argued you can still make money by putting it into property to rent out. In 2002, buy-to-let mortgages made up just 5% of the value of all new mortgages. But that rose to 12% of the total by 2007, then fell dramatically when the property market crashed the following year. But buy-to-let is now almost back to the 2007 levels. So would the golfers consider that as an option?
If I was younger, I think I'd go into that in a big way. But I think it's got to be a young man's sport. You've got to be young, you've got to have quite a bit of money, because you're going to have 5 years where you're not making any money at all. But after that, it's quite a lucrative game, I should think, to be in.
Just down the road from Rochford, here in Southend-on-Sea, the property market is very, very different. Not so many owner-occupiers. This is buy-to-let territory. It's argued that if you have the money to buy a property, to let it out, your returns will be far, far greater than just putting the money in the bank.
Buy-to-let in Southend is extremely popular at the moment. We're finding that approximately 30% of our sales is going to buy-to-let clients. We're finding people that have got money in the bank, not getting a particularly good return, are saying, right, OK, let's buy the property. They're gaining somewhere between 6 and 8% return on their money, and potentially, of course, they're then gaining further capital growth at a later date should the market start to recover, which it seems to be doing so at the present time.
The town has a large number of properties available for rent. An average house here costs £152,000, and the average rent is £7,800 a year. The result is a return on that rent of 5.13%, significantly above anything a bank can provide. But in order to buy to rent, you will of course need enough money, and that's no help for savers with modest means.
As far as I can see, policymakers simply don't care about savers. The people who are being helped by the funding for lending schemes or the help to buy schemes are actually going to be those who've already got quite a bit of money. This is about helping those with lots of money to invest in another property. It's not about the ordinary average saver.
So the message from Essex is this: if you've saved a lot of money, you could make a lot more. If you've saved a little, it's going to be difficult.
Robin Benzelow. Simon Rose from Save Our Savers is here, along with the former banker and now financial writer Francis Coppola, and Henry Pryor, who is a property market analyst and writer. How tough are things for savers, do you think?
They're appalling for the majority of savers. It's impossible to preserve the value of your capital anymore. We get savers every single day lamenting the fact that they've been putting money by perhaps for all their lives in the hope often that they can eke out their retirement, and they're having terrible trouble.
But, I mean, it's not as if savers are being singled out. Anybody who is in a wage job is finding they're not keeping up with inflation either.
No, that's true. Real wages are back to the level they were 10 years ago. Everybody's having trouble. But if you're on a fixed income, then it's even worse.
What would happen if interest rates went up to make savers a little happier? What would happen to the housing market?
Well, the housing market would understandably come under a great deal of pressure, and those who have arguably overextended themselves, been taken in by the government and by the powers that be, and who've encouraged them to go out and borrow money to invest, as they would see it, in property, would be left potentially, as many people have in Northern Ireland, for example, nursing considerable losses. They're still looking in the province at losses of 50% or thereabouts since the crash and the credit crunch of 2007-2008.
What the political consequences of that for any government would be pretty horrendous, wouldn't
it? It would be Armageddon, and that's why we can see, regardless of your own moral views as to whether the government is right or wrong to be doing this, the coalition are determined to put a floor under house prices and to make sure that house prices steadily increase, it would seem, up to and through the 2015 general election.
Why does anybody save in this kind of market? I mean, you might as well spend it, I suppose.
Well, I can understand that people might want to spend their money rather than save it. I think there are two different sorts of savings. There's the kind of savings that you put away for a rainy day to cover, the washing machine breaking down or something like that. And I don't think that most people would expect necessarily to get much return on that anyway. It is just simply a rainy day fund. We're really talking about long-term savings here, the kind of money that people put away for their retirements. And I think people have got used to having quite high returns on savings, high-ish returns on savings, because we've had a strongly growing economy. That's not the case anymore. And so savers are finding that the economy can't support the kind of income level that they've got used to.
But successive governments always say savers are so wonderful, they're absolutely marvellous, it's great to have savers, we must rebalance the economy in favour of saving rather than consumption. They always say it. It doesn't actually happen, does it?
It doesn't, I must admit, when, to be honest, in order to get a recovery, you actually need people to spend more, you need more economic activity. The benefit of saving, the value of saving to the economy, quite apart from helping people to prepare for their futures and so forth, to support themselves in their retirement, is also so that we can get some investment into the economy, into small businesses, into productive investment. That's really what we need capital for, but to do that, savers must be prepared to take some risk.
Do you take that point? I mean,
No, that's exactly the problem is we're undermining savings. Save Our Savers have calculated that so far since the crisis happened, savers have contributed £285 billion. They're that much worse off, which has gone really to prop up an ailing economy that they weren't responsible for. If we had 3 years more of interest rates at this level, then savers will have contributed nearly £500 billion, 4 times the government's annual deficit.
But what do you make of the point we heard from Henry, which is if things were done to make you happy, it could possibly cause a housing crash?
We've now got to the position, we got into this crisis because of debt. We've now continued to stay in debt. We're being encouraged now to take on even more debt. Well, the problem is we've become ever more dependent upon this sort of pain relief of low interest rates. We've now got to the stage where the patient's not being treated, but he's being kept on this sort of pain relief until he's become totally dependent upon it.
What do you make of that, Francis?
I actually have some sympathy from that point of view, to be honest. Ramping up consumer debt again is not the way to recover from this. We need investment. And yes, for that we do need people to be putting money aside, putting money into the economy, investing in business and so forth. We need people to be doing that.
Where does buy-to-let come in this? I mean, we've seen that some people are attracted to it, but you can't just take a fairly modest amount of savings and buy another house.
No, I mean, the big threat...
Buy any house, frankly.
The big threat, the big concern that all of us have is that we're taking people from being savers and turning them into speculators. Now, the housing market may have a reasonably rosy short-term view, and we expect house prices, particularly when stage 2 of the government's controversial Help to Buy scheme kicks in at Christmas time, when people will be able to borrow money to be able to buy houses up to £600,000 that are second-hand, not just new build houses, which is where the scheme works at present. That is going to add further stimulus to the already frothy housing market and will continue to drive up prices. That's what's attracting speculators or people who are looking at buy-to-let as an alternative to 0.5, 1%, 1.5% returns they can get in the bank.
And as you know, that's all great as long as it's great. And then one day it won't be.
As long as the music keeps going, we're all happy. But at some point, the music will stop and somebody will have to pick up the pieces.
All bubbles eventually burst.
So what should savers do? You want the government to do something or the Bank of England to do something, but what are the alternatives for savers now?
Well, any individual saver should make sure that at least they get the best possible savings rate. They're all terrible, but some are even worse than that. Some people find that, they took a bonus on account and it's gone and they haven't realised they're getting next to nothing. But unfortunately, if you want cash savings, if you don't want to go into speculation, then you are going to be losing money.
But do you see the argument for going into speculation? I mean, do you think...
I can see why it's happening. Savers are getting increasingly desperate. The problem is, the real reason is not just interest rates, it's also, as you mentioned before, inflation. Everybody is losing the value of their money. The pound has depreciated in value a third over the last 10 years. Well, if this keeps going on, we're going to get to the stage at which people are going to understand that it's not worth hanging on to money at all, and then we start having really serious problems in the economy.
I mean, what can savers do?
It depends what they want to do. If they're saving for the long term, to my mind, money is not the thing to be investing in for the long term anyway. You need to be looking at financial assets and hard assets and things like that. I don't think myself that buy-to-let is a particularly good strategy for an investor who's iffy about risk. Simply because we shouldn't forget, for example, in the crash in 2008, Bradford and Bingley actually failed because the bottom fell out of the buy-to-let market. It happened before and it can happen again. And I think this looks a little bit like an overheating bubble to me. So it needs some care, but people should not be expecting just to put large amounts of money in a bank account and leave it there by way of long-term savings. That's not a good use of bank accounts.
It is interesting listening to the three of you that the human capacity to make the same mistakes over and over again seems to be fairly enormous,
Absolutely,
doesn't it?
Yes.
Is that how you see it?
It's bad enough when we don't learn from history, but when the history is only 5 or 6 years old, it's getting really scary.
There is no doubt that this particular government is intent on feeding the present house price inflation that we can see coming down over the next 3 to 5 years. All the commentators are talking about steady, if not reasonably spectacular, house price inflation. Investors, or speculators as they are, those who are looking at buy-to-let, are now looking at possible returns, not just of the yield, which in some parts of the country is actually very marginal. They're actually investing purely for capital gain. That's what they're hoping for.
OK, we'll leave it there. Thank you all very much.